Hi everyone, my name is Piterpakulski. Today we'll continue building financial model of a nail salon from scratch. And today we are moving to coefficients, some additional coefficients needed for scenario play. So, for example, when you are done with cash flow statement, when you see the simple discounted payback period, when you see the internal rate of return, just wanna adjust some just big numbers, big inputs, and you can use some sort of coefficients that can easily help you with building a huge amount of scenarios. So first of all, you need to have a coefficient for revenues, direct expenses, payroll, fixed expenses, investment plan. So you just can play with these coefficients and quickly just see what will happen to the business if revenues go down, if expenses, direct expenses go up. So and you have to be able to quickly create these scenarios. And in this video I will create a very simple block of coefficients that will allow you to play with all these data. So here where we have consolidated revenues and direct expenses, here on the bottom we will add these coefficients. I will call them general coefficients, parameter, percentage value, so I will add coefficients to revenues, then direct expenses, then fixed expenses, investment plan. So mainly we will have groups of coefficients. So the basic value of these coefficients will be 100%. And now I'm just adding coefficient to revenue. We are freezing this cell. Then we are adding coefficient to direct expenses. Then payroll. Let me add payroll here. Direct expenses, insert payroll. So direct expenses, then payroll. Let's copy. We also have payroll, additional payroll. Let's add coefficient also here. Payroll, fixed expenses. We are adding coefficient from here. So this is fixed expenses. Then we have additional fixed expenses. We're also adding coefficient here. then investment plan. So here we go with investment plan. The first investment plan is connected with amount of workplaces, and also we have some additional investment plan which is not connected with amount of workplaces that we have. So here, so let's check the cells. Now we can extrapolate these formulas to the right. And now we can play with the coefficients. So for example, we see that what will happen, we see the simple discounted payback period at the end of financial model. Then we can, for example, adjust the revenues, so we can just see what will happen with simple and discounted payback period if we take just 80% of the revenues that we currently have. For the basic scenario, what will happen to the net present value, net profit, profitability, or what will happen if we have 10% higher than the revenues will be 10% higher that we have in our basic scenario. So what will happen to the business, what will happen to the payback period, simple, discounted, internal rate of return. Or we can create scenarios, so what will happen to the business if the revenue will be 20% lower than we expected, for example, but direct expenses will be 30% higher than we expected, payroll will be for example 10% higher than we expected, fixed expenses will be 50% higher than we expected. So we can, investment plan will be 10% higher than we expected. So we can easily play with all these coefficients, creating huge amount of scenario, and we can see how stable our business idea is, and this gives to the business owner a huge amount of new information. He really gets acquainted with his business idea for the first time, playing with all this stuff and looking at profits, looking at diagrams. So this is a huge amount of new information that the business owner learns from his business idea from the first time in his life. So maybe this video was valuable for you. You may give us a like, subscribe, share this video with your friends. You can also order financial models from scratch for your unique business ideas. We can help you with that. So see you guys in next videos. Thank you and bye.